Hello friends, a very warm welcome to my channel. In today's video, we are going to analyze a small cap company called Jash Engineering, which manufactures equipments for water treatment, the dam water gates, as well as the wastewater treatment plants. The moment I've put this poll on the Telegram, immediately within a few minutes, Jash Engineering was selected. So from this, I understand your interest in the small cap and micro cap companies, and I will try to make more videos on such small companies in the future also. If you're new to the channel, please do subscribe and hit the bell icon. And don't forget to join a Telegram channel where we discuss daily market analysis and some stock views. Let's get started. So Jash Engineering is a manufacturing company. Now what does it manufacture? It manufactures the gates which used to stop the water in the dams. It manufactures other equipments used in such dams. It manufactures the water treatment equipments and wastewater treatment equipments which are used in industries. We'll see about the products in detail in the coming slides. This was incorporated in 1973 and it has headquartered in Indore. There are 4 manufacturing units in India and 1 in US, which is a subsidiary which they recently acquired. The company has presence in 4 continents and more than 45 countries, so it has a well diversified business across the globe, which de-risks the company from any single country event. More than 60% of the revenues are from exports. The company intends to increase this share further as they prefer the revenue from foreign countries, because the payment from their customers as well as the governments of those countries is faster than India. The company has more than 800 employees. Now let's talk about the management of the company. The chairman and managing director of the company is Mr. Pratik Patel. He is BE in production and MBA finance. He has been with the company since more than 33 years. In fact, his parents as well as his grandfather was also into a similar kind of business. So he is a third generation entrepreneur in the similar kind of business. And he heads the entire company and manages the strategy and the growth of the company. Now let's talk about the history of the company. As you know, it started in 1973 as a private limited company. In 1996, they converted into a public limited company and it became the biggest company in India for water control gates. In 2000, it was the first company to introduce screens in India, which are the fine screens. As you can see in the picture, I thought by words you may not understand, so I've put up a picture. So these kind of screens are used in different industries to stop the unnecessary particles to go into production. So this was the company who first introduced screens in India in 2000. In 2005, they became the largest in the fine screens in India. In 2006 to 8, they had a technical collaboration with a German company to manufacture valves for bulk solid handling. During the journey of the company, you will observe a lot of times that the company is having technical collaborations with companies in Germany, Austria and various other places. So that's the kind of working style of this company, where they do a technical collaboration with foreign experts and they also form joint ventures sometimes. In 2009 to 10, they acquired a company called Sure Seal and they set up a new plant in SEZ Pithampur. In 2011, they acquired another company which is Shivpart, which is an Indian company. And in 2012, they started a new plant for fabricated products, again with a technical collaboration with a company in Austria. In 2014, they acquired another company, which is an Austria-based company. And in 2016, they acquired, this is one of the key acquisitions of this company, which is Rodney Hunt, which is a US-based company. So this company was manufacturing the water control gates and the company had to shut down. But Jash Engineering had acquired that company and now it is turning around that company. And they are quite hopeful that in FY23 this company will become profitable. In 2017 they got listed on NSE and 2018 they started the new plant in USA for fabricated products. In 2019 they again had a technical collaboration with a German company for manufacturing disc filters and they also set up a new plant in SEZ area. In 2021 they went for a capacity expansion of their manufacturing facility which they already had in SEZ3. So throughout their journey they have had different technical collaborations. They have organically as well as inorganically grown the company through different acquisitions across the globe. Let's understand the products and business of the company in the form of pictures so it is easier for us to understand. So they manufacture water control gates. Now what are water control gates? These control gates stop the water from flowing and control the water flow in the dam area. So as you can see from the photos, you will be able to recollect such kind of gates which we see in the dams. They also manufacture heavy fabricated gates. So these kind of gates are used for other purposes other than water control. The next kind of equipments which they manufacture are the knife gate valves. So these are valves which are used to direct the flow and stop the flow of water. and they also manufacture special purpose valves. Now, other than liquid to control the flow of solids, also they have bulk solid handling valves. To manage the flow of different materials during a production process, they have screening conveying equipments. And in screening equipments, as we have understood, these kind of equipments prevent the flow of different size of particles during the production process. So to get an idea, their equipments are used in different processes like the hydropower equipments, the screw pumps, the filtering equipments. So these are the different industries in which their equipments are used. In terms of different categories of their product usage, you can see their product usage is about 10 to 15% in the industries which are into human drinking water cycle. For the storm water cycle collection and purifying the storm water, it is about 5 to 10%. For human wastewater cycle, which is the treatment of the wastewater, it is about 60 to 70%, which is a major chunk of their revenue. Renewable energy generation usage is about 5 to 10%. So as the renewable energy segment grows, this company will also be a key beneficiary. Industrial usage equipments are about 10 to 20% of their revenue. So like this, the company has a very well diversified revenue base. These are the users of the products of the company. They are used in water intake systems, storm water pumping stations. So stopping the water, regulating the water, purifying the water, as well as pumping the water to the required areas uses these kind of equipments which the company manufactures. The wastewater treatment plants, their equipments are used in irrigation systems. They are also used sometimes in the power plants, paper and pulp manufacturing plants, petrochemical plants, steel plants. So various industries are using the company's products. These are the subsidiaries of the company. There are 4 wholly owned subsidiaries. First one is Rodney Hunt US. The second one is an Austrian company. The third one is a Hong Kong based company which is Engineering and Manufacturing Jash. The fourth one is an Indian subsidiary which is Shivpart Engineering Private Limited. So through the parent company as well as these subsidiaries, the company does a global business. Now throughout the journey, the company has done certain key acquisitions, as you have understood from the history. Now you will understand why the company had acquired those companies and at what valuations they have acquired and how much is the benefit that the company is deriving from such acquisitions now. So such kind of disclosure in the presentation was quite impressive, and I was very impressed to read this kind of disclosure from such a small company. So talking about Rodney Hunt first, which was their most recent acquisition, the FY21 revenue of this company was about 100 crores and which is about $14 million, and the company was acquired at $4 million. So you can understand that there is a very reasonable valuation at which the company was acquired, and that company is generating much higher revenue than the price which was paid for the acquisition. And this company led to adding of a renowned brand which is the Rodney Hunt in US, which is a very well-known brand. So since the company could not operate well at that time, the customers might have lost trust in that company. But after Jash Engineering has taken over, they have turned around the company and made it profitable. The customers will also have good confidence in the company. They will start giving them orders full-fledged as earlier. And with this acquisition, Jash Engineering aims to become the #1 player in US and across the globe in water control gate systems. The second acquisition we will talk about is the Austrian company, and this company has generated a revenue of about 21 crores, which is about $3 million in FY21, and this company was acquired at euro $2 million. So which is again a reasonable acquisition. And this company, which is the Austrian company, is known for their screening technology, and the company has also advantage through this acquisition of that brand name. Shivpart Engineering Private Limited, which is an Indian company, is acquired for about just 6 crores, and this company is generating a revenue of about 25 crores. So this again is a very smart investment which the company has done. The next acquisition we'll talk about is SureSeal, which was an Indian company, and this company has generated a revenue of about 9 crores in FY21. This was acquired at just 1 crore. So this again has become a profitable acquisition for company acquiring at such reasonable acquisition. So by this, what we understand, the company which is Jash Engineering is growing organically as well as inorganically. And inorganically, whatever acquisitions they have done in the past, those were smart acquisitions at reasonable valuations, which are now bearing fruits for their efforts and adding to the revenue and profits of the company. These are the different facilities of the company across India as well as in the US. Together, totally, the company has a capacity to get a turnover of somewhere around 500 crores out of all the facilities combined. This is the segment-wise revenue contribution. From the water control gates, they get about 54%. So this is their main segment of revenue. From process equipment, they get about 10%. From valves, they are getting about 14%. Screening equipment, they are getting about 22%. So the water control gates business is especially a little cyclical, where they get more orders in the second and the third and fourth quarter, and the first and second quarter are little submissive because of various weather conditions like monsoons in the first two quarters. So the other revenue segments, which are the valves, the process equipment and the screening equipment, these are the main things which are used more in the industries, where they generate consistent uh, revenue flow for the other quarters, and the company is slowly trying to expand into these other segments so that the revenue gets evenly distributed across the year. There are a lot of big brands working with this company, which gives us a lot of confidence about the management's integrity as well as the quality of the products which the company manufactures. And these kind of customers generally don't change their suppliers, and they tend to have a long-term relationship with their customers. In the Indian customers, broadly, when we divide into key contractors as well as the consultants, the broad two categories. So let me explain that Jash Engineering is only an equipment manufacturer. They don't do EPC projects. They don't construct and install the project. They don't take up the entire project for the customer. The EPC project contractors are different, and they buy the equipment from Jash Engineering and install them in the form of the entire project from different vendors for the customers. So in the contractors category, you have customers in India like SAIL, NTPC, Reliance, NCC. You have Thermax, Ramkey, Kirloskar, Adani Group. So all the well-renowned groups on the contractor segment are their clients. Under the consulting segment, they have TCS, they have names like NJS Engineers as well as Sapient. In global customers base also, they have key contractors like GE, Hyflux, UES, and consultants like Bechtel, Stantec, MWH. Now, after understanding the business of the company, let's talk about the industry, the scope of the industry, the rate at which the industry is growing. So the global water treatment industry equipment market size is just about $61.6 billion in 2020, which is a huge market size. And this market is growing at a CAGR of 4% up to 2028. This industry is characterized by developing customized products as per the customer's requirements. And these kind of equipments have a very wide application across different industries. As you know, as the population is increasing due to urbanization and due to different habits of the human beings, we require more and more pure water. So the requirement of such equipments is bound to rise. Industrialization will lead to more usage of water and more contamination of water. So as per the government norms, the industries have to purify their water and don't let it out to spoil the environment. So the companies will establish wastewater treatment plants, and they will need the equipments of companies like Jash Engineering. They have to comply with different government regulations across the globe, and the investment opportunity in the wastewater treatment plant is approximately about $130 billion by 2030. So the industry has a huge market size, and it is growing at a decent rate of about 4 to 5% every year, and all the governments of different countries have allocation to this particular sector in their budgets. Who are the competitors of this company? There are different competitors in India and across the globe. There are not identical competitors in the listed space, but in the unlisted space, there are many competitors. You cannot find a company making all the products which Jash Engineering is manufacturing. But for instance, you compare with the water control gates or the valves. So individually, you will have different competitors like RD Engineering, SAP Industries, Hindustan Water Engineering Company, Summit Valves Controls Inc., which is a foreign company, Shabalar Fabrication, which is again a foreign company, FKB, MB Crusher India, as well as a RHEWUM, which is a German company. So what are the competitive strengths of Jash Engineering when compared to its other peers? Jash Engineering is among the top 5 companies in the water control gates segment in the world, and it aims to become the number one in the coming years. To achieve this, they have done a key acquisition of Rodney Hunt, which is a US-based company. The company owns globally recognized brands, and the customers bank on their quality and give them repeat orders. They have a lot of experience in this field and expertise to manufacture the products as per the customers' expectations and give them consistent quality. They have diverse product offerings which other companies generally don't offer. The other companies are specialized only in one segment of products, whereas when a customer works with Jash Engineering, they are able to offer a comprehensive product range so that the customer doesn't have to deal with multiple vendors for a single project. They have large manufacturing facilities in India as well as abroad, so they are able to take up big size orders and complex projects for their customers. And due to their presence in different countries, the customers of those countries also have more comfort with working with Jash Engineering. They have diversified revenue from different 45 countries. So even if a particular economy is not doing so well, they are able to maintain their revenue. So these are the competitive strengths of Jash Engineering. Now looking at the growth prospects of the company, their company has recently planned a capex of about 40 crores, and after the capex is done in the next coming years, the capacities of production will further increase from 500 crores, which is a present capacity, combined capacity of all the plants put together. The company aims to become the world number one in water control gates, and slowly in the other segments of products also, they are planning to become among the top few leaders in the world globally. Their American subsidiary, which they had a acquisition recently, which is Rodney Hunt, they are aiming for a turnover about 400 to 500 crores in the coming years. And the company has done SAP implementation to automate different processes of working in their company. For a bigger company, SAP implementation may not be a big deal, but for a small cap company, having automations and becoming digital through implementing ERPs like SAP indicates a good sign of growth from an investor's point of view. That is why I'm mentioning that thing here. The company will keep adding new products to their portfolio, and they are establishing a new facility to manufacture iron gates at their SEZ 3, and this facility will start production in the April 2022. The company will look at improving the margins of their business. In fact, in the last few years, they've already improved their margins, and they will continue to form joint ventures for technology purpose, as well as they are prepared to grow inorganically as they have grown in the past. What are the different risks which this company might face, and the risk which an investor might observe in the company? The company has some related party transactions related to lease, some job works, as well as some sale with their entities in which the promoters are involved. So these kind of things should be closely watched going further, and this kind of transaction should not become of a material value if you are an investor in the company. The company has the subsidiaries, few of which are loss making. There is uneven demand in this business. The first 2 quarters are very dull, and sometimes the company reports losses in the first 2 quarters, and the third and fourth quarters are better, and they compensate for the first 2 dull quarters. These are tender based orders, so the company has to give competitive bids, and the lowest bidder only wins the projects. So this leads in compression of margins of business. There is no escalation clause in the contracts which the company enters with their customers. So if there is inflation or due to any reasons like freight rise or anything like that, where the cost of production or delivery increases, the company may end up losing the profit of margins, and sometimes even end up in loss to fulfill their contracts. As it's a global company, they will have a forex risk and geopolitical risk of different countries. The company has to maintain up-to-date technologies, or else the customers will switch to other vendors. And since the company has a long period of credit, the company always has a risk of default from the customer side. So these are the risks from the company's end as well as the investors' end. Now look at the order book of this company as on February 2021. From the domestic segments, they have within India orders of about 191 crores, outside India of about 285 crores, and combined order book of nearly 476 crores. Subsidiary wise, if you see, Shivpad Engineering has of about 20 crores, Engineering Manufacturing Jash has about 1 crore, and Jash USA has about 113 crores of order book as on Feb 2021. Among the upcoming orders which are already negotiated, which are already in the finalization stage, within India is about 3 crores and outside about 82 crores, combined about 85 crores. This is in addition to the other 476, and these may flow and get converted into confirmed orders in the near future. Under the categories of orders which are still under negotiation, they have a combined order book of about 111 crores, out of which 33 crores is within India and 78 crores out of India. And out of this 111 crores, they have a success rate of about 35%, which the company generally estimates based on their past performance. Now let's talk about the numbers. Starting with the quarterly results, in Q3 FY22, the company has clocked a revenue of about 104 crores compared to 29 crores in the earlier year. EBITDA is about 18 crores versus 16 crores, so EBITDA has gone up, and profit after tax about 14 crores to 10 crores. EBITDA margin has about 18% from 20%, so EBITDA margin has gone down. Profit after tax margin is about 13.4% to 12.65%. So profit after tax margin has increased. The company has a very good order book of about 473 crores as on February 2021. Now let's talk about the yearly numbers. We are considering from FY18 to the trailing 12 months because we have already finished 3 quarters in FY22. And to bring to your notice, FY18 was a bad year for the company. So in some ratios where I calculate the CAGR, I am taking a base of about of FY17 in profits so that there is a fair value of CAGR and it doesn't look a very high figure. So in revenue, the CAGR is about 18% growth in the last 5 years, which is quite decent. In EBITDA, it has gone up from 9 crores in FY 18 to 49. So as you can see, 18 is low, just 9 crores. And taking FY 17 as a base, the CAGR comes to about 23%, which is still impressive. EBITDA margin has improved to about 15 to 17% in the recent years. Profit after tax has gone up from 8 crores in FY 19 to 32 crores in the trailing 12 months, and the profit after tax has grown at a CAGR of about 33%, which is very impressive. Profit after tax margin has improved from about 7% to around 10% nowadays. The equity is consistent. The reserves are steadily growing as the company is making consistent profits. Borrowings are under control. They have about 86 crore debt on the balance sheet, which brings a debt to equity of just about 0.58. So it's quite understandable for a company like this. Trade payables are under control. There are no abnormal movements in trade payables in the recent years. Fixed assets are steadily maintained to about 100 crores in the recent years. Inventory levels are steady except in FY22, where the inventory levels is shot up to 114 crores. So this happens whenever there is a disruption due to any reason like COVID in the country in which their clients operate. So the customers try to postpone their orders as they don't execute the projects on time. So this is one of the risks in this kind of companies. Inventory days have gone up from about 178 days to 201 days. So this is one area of working capital or inventory cycle where I feel this is one of the risks in this company, and the company has a very long working capital cycle. And if the company improves this to about just let's say 3 months or so, then there can be better operating efficiencies, better profit margins, and the chances of default or delays by the customers will also get reduced. Trade receivables are about 51 crores as on September 21. So the trade receivables are under control. Debtor days are somewhere around 117, which is more than 3 months of credit to the debtors. In fact, nearly 4 months of credit to the debtors. Cash equivalents are fine. The company has a good liquidity position and has a cash of about 33 crores on the balance sheet. The operating cash flows have been positive except in FY18, which was a bad year. Free cash flows have been positive in the last 3 years, but earlier the free cash flows were negative. In FY21, the company has generated a free cash flow of about 25 crores. ROCE has improved. It has improved to about 19 to 21% in the recent couple of years. The auditors of the company are Walker Chandiok and Company LLP, and the remuneration to executive directors is about 1 crore. The ROE is about 22%, which is very impressive, and the company has not paid dividend in the recent year. Let's talk about the shareholding. The promoters hold about 53% in the company and public holds about 47%. And the promoters have a small pledge of about 3.4%. There are no institutional investors in the company, as it's a very small company having a market cap of just about 500 crores. There are two ways of looking at such companies. One is there are no institutional investors, so the trust factor or the comfort which you get as a retail investor is less. Another way of looking at it as a aggressive investor is the aggressive investors look for companies where there is growth, but there is no institutional investing right now. So when the company becomes a little big at a scalable stage, and then the FIIs, DIIs start entering. So if you are an early investor in such small companies, you have a chance of getting higher returns than the institutional investors. So there is a positive as well as a negative perspective of looking at companies wherein there are no institutional investors. Let's talk about the valuations. The share price is about 486. High and low in the last 52 weeks is 260 to 628. In the last 1 year, the stock has given a return of about 71%, and the last 3 years about 78% CAGR. So in terms of returns, the investors are very happy with the company. The market cap is just about 578 crores and face value 10 share. Earning per share is about 27 rupees, which gets a PE of about 18. And the industry PE comparing with other similar equipment manufacturing companies, which are although not identical, is somewhere around 24. 3 years median PE is somewhere around 18 and the book value is 124, which brings the PB ratio to 3.9 times and market cap to sales is 1.7x. So the valuations overall are reasonable, but you should always remember that when the company's size is very small, the market tends to give the companies lower valuations as the companies involve a higher risk. And also in such businesses where the revenue is inconsistent, the valuation multiples are lower. Looking at the chart, the stock is consolidating sideways in the last few months and it is kind of making a flag pattern. It is taking support at a 200 days average of about 444. So in the range of 420 to 450, the stock will take a lot of support, and if this level is maintained and the quarterly results are good, the stock may bounce from the current levels. So if you are satisfied with the business model of the company and its financials, and you are prepared to take a risk investing in a small cap company, you can start accumulating the stock in this range of prices. So this is about Jash Engineering. I hope you like the analysis of the small cap company, which is very interesting to understand. To summarize, the company's promoters have good experience in working in this industry. They have grown the company from a very small business unit to a global company. They have done it quite well, acquiring different companies inorganically also. They have developed a wide range of products catering to different industries to de-risk the company's business. And the industry has good tailwinds, and it's a global opportunity. The fundamentals of the companies are strong, except a few things here and there, like the working capital thing. But a few things you should keep in mind in the form of risk is the promoter's son is not willing to take over the company or succeed the company. So the promoter plans to change it into a professionally managed company after he retires. So it will be important to see as an investor whether the transition is smooth and the new management is managing the company as good as before. The business is tender based business, so if you are not competitive in bidding the tenders, you don't get much business. There is a lot of competition from companies in India as well as multinational companies. The company has a lot of the company has a longer working capital cycle, so there is a credit risk attached to the business. It's a small cap company, and investing in small cap company will have their own risks as an investor. Valuations look decent as long as the company continues to perform at the same level. If there is any downturn in the business globally due to any kind of a factor, geopolitical factor or any reason, then these valuations may not be justified. So these are the things based on which you can take a decision to invest in Jash Engineering. I hope you like the overall analysis where I've tried to cover everything about the company in a 15 to 20 minute video. So if you like it, hit the like button. Thank you for watching this video and subscribe to the channel. If you want me to analyze your favorite companies, do mention the names of the companies in the comments. I will surely consider them for the upcoming videos. So thank you for watching and spending time watching this video, and have a wonderful day.